On the Spot with Michelle Makori is brought to you by Swan Bitcoin.
Hello, I'm Michelle Makori. Thank you for watching. The Bitcoin rally is gaining steam, fueled by speculation that a spot Bitcoin ETF approval is imminent. Bitcoin prices crossed the 37,000 level for the first time since May of 2022 on Thursday and just hit 38,000 on some exchanges. And this comes exactly a year after the big collapse of FTX that saw Bitcoin tumble to $16,000. Well, here to break down these moves, give us a sense of what's next for the world's largest cryptocurrency, and to weigh in on whether a spot Bitcoin ETF is actually a positive for Bitcoin in the long run, is Fred Thiel, Chairman and CEO at Marathon Digital Holdings, one of the largest Bitcoin miners in the world. Fred is a titan in the fintech sphere and has over 3 decades of hands-on experience in high-tech industries. And it's a pleasure to welcome you to Kitco.
It's great to be here. Thank you for having me.
Great to have you, Fred. Look, we also want to get your thoughts on the macro economy and, of course, on Marathon's results for the third quarter. You beat earnings estimates, missed on revenue, but shares up about, 10% as we speak and up over 180% year to date. But before we get onto Marathon, let's start off with this big Bitcoin price move. And ever since BlackRock filed for a spot Bitcoin ETF in June, there has been positive sentiment that this was going to happen, given that this is BlackRock, the world's largest asset manager with over $9 trillion of assets under management, and a perfect record for ETF approvals. And we've seen that really lift the price of Bitcoin. But what is driving this dramatic push up today, Fred?
Well, you have a couple of things. Partially, Bitcoin has a liquidity supply limit in the marketplace today. There's a lot of Bitcoin sitting off exchanges in cold storage by long-term hodlers. And the belief that the ETF is imminent is driving increased speculation, people wanting to buy Bitcoin because they believe that as soon as the ETF is approved, billions of dollars of liquidity will flood the market, which will cause a lot of Bitcoin to have to be purchased, which will drive the price up, of course, because it's not like other industries where you can just print more Bitcoin. There's a limited number of Bitcoin and there's very limited supply in the marketplace today. So as we look at Bitcoin, today, November 9th, or this week, is when the SEC window for approving potentially a grayscale ETF happens. There's some speculation around that, I think, happening. You have institutional buyers coming in and buying. You also have Binance that listed it's a new token relative to Ordinal. So it's the ORDI token, ORDI, I believe it is. And by listing that token, it's a BRC20 token, which settles on the Bitcoin blockchain. That's driving a lot of backlog in the mempool, which is the buffer of transactions wanting to get processed on the Bitcoin blockchain. And so now you're seeing even transaction fees. Earlier today, we won a block with a transaction fee of 3.25 Bitcoin, which is more than half of the block subsidy we get when we process a block. So we believe there's just a lot of demand right now that's driving price up. And we'll have to see if and when the ETF is approved, what happens to the price of Bitcoin. But it'll be very interesting to see.
Yeah, absolutely. And as you mentioned, the SEC has set a window from November 8th to November 17th. To approve the first spot Bitcoin ETF. But could this be delayed? They don't have to make a decision by the state, or do they?
No, absolutely. They could delay. They could flatly deny them again. But that would be, I think, the market has right now, the odds are 90% that they're going to approve. The question is, do they approve now or do they approve in January when more of these applications are due to be approved? My personal opinion is that they're going to want to approve a block of these ETFs. Mm-hmm. The news lately has been that the SEC has been in active dialogue with Grayscale and others, which is a lot of progress since before, which means they're kind of dotting the I's, crossing the T's, going through to make sure that everything is buttoned up and ready to go. Custodial agreements are set up. All of the processing is going to work in the back end. And then likely, I would assume 5 of these would be approved in one block because the first few of these to get approved are going to have a first mover advantage. They're going to suck up a lot of the capital that's going to want to move into these. instruments. And then there'll likely be a wave 2 and a wave 3 potentially. And now you're also seeing a number of the applicants applying for Ethereum ETFs also.
Yeah.
So it's going to be an interesting time here over the next month or two.
Yeah, definitely. I mean, there's been a rally in other altcoins as well, not just in ETH. But let's focus on Bitcoin. And Fred, as you mentioned, several applications for a spot Bitcoin ETF. I believe there's a total of 12 asset managers filing at the moment due to get a result. But you said you expect a chunk of 5 to be approved at once. Do you have any picks on who those may be? BlackRock, I'm assuming, in there?
Yeah, I think Grayscale, BlackRock, likely ARK, and then we'll see who the next in line. Franklin Templeton was a latecomer to the list, but I think really ARK, BlackRock, and Grayscale. Grayscale doesn't have to go buy Bitcoin, so Grayscale being approved really won't suck up a lot of demand for Bitcoin. What it will do is release potentially Bitcoin. BlackRock, will need to buy Bitcoin to put into the fund. They may have been seeding the fund. Seeding is a process by which they can buy in advance of opening trading on the ETF. And then I think it's going to be very interesting to see also how these ETFs settle, meaning in the traditional world where people are buying ETFs in stocks and equities, it's the closing price at the end of the day. Well, there is no closing price for Bitcoin. It trades 24/7. So are these going to be live, meaning that when you buy the ETF share, it prices the Bitcoin at that time, or does it settle once a day, which would then create interesting opportunities for arbitrage. So that'll be very interesting to follow.
Yeah, no, that's an excellent point that you bring up over there. In terms of the price move that we've seen now, Fred, do you expect a price rally on news of approval, or is it already priced in? Is it one of those, buy on the rumor, sell on the news type of events?
It's a great question. I think typically with these things, you would expect buy on the rumor, sell on the news, though there are going to be waves of news with this. The first wave is going to be it's approved. There'll be an initial bump, I think, and then that initial demand will settle down. And then it'll be how many billions of dollars go into the first of these ETFs. And if that number is a spectacular number, then you'll see another run up again. What you're also just going to see naturally is, as Bitcoin is having to be bought to be put into these funds, it's going to have to move up in and of itself. So it's kind of unique in that the speculative instrument in and of itself is the commodity that makes up these ETFs. So it could be actually a self-fulfilling cycle, a very virtuous cycle, but we'll have to see. This will be a first-time kind of event. And if you look at gold ETFs as the model, they were very successful initially. And a very large portion of the funds that could be invested in gold went into these ETFs that drove a lot of demand. And I think the market is optimistic that Bitcoin will follow suit somehow.
Do you expect some kind of negative reaction if we don't get approval in this time frame by November 17th or maybe even by January 10th?
I think if we don't have approval by mid-January, you're going to see some definite price declines, most probably, because the speculative kind of interest will wane and we'll be back on macro driving Bitcoin accumulation. But Bitcoin is an instrument that trades, or a commodity that trades a lot on news, as can be seen by the past 18 months. Though the volatility in the Bitcoin market has normalized a little bit. It's decreased over the years, but it's now kind of at a type of volatility which is acceptable to a lot of investors. And when you look at the risk-adjusted returns of Bitcoin, I think you're seeing more and more people, Stan Druckenmiller included, saying that, hey, a small position in Bitcoin, 1 or 2% of your portfolio makes sense. And when you do the math on what 1 or 2% of a portfolio means when there are trillions of dollars of assets in portfolios, that in and of itself means a lot of Bitcoin is going to have to get acquired if people are going to load that into their portfolios. So whether it's an ETF or spot Bitcoin, I think the long-term future for Bitcoin is very optimistic. Obviously, we wouldn't be in the business that we're in if we didn't think that was the case.
Yeah, a big turnaround from Stanley Druckenmiller, all of a sudden coming out and saying that he does see Bitcoin as a store of value perceived that way by, younger generations. So it's interesting to see that shift in sentiment. And of course, we saw a huge shift in sentiment from BlackRock CEO Larry Fink, who used to refer to Bitcoin as an index for money laundering. So a big turnaround there. But I just want to make the distinction, though, between approval and the actual launch, because I believe it takes quite a bit of time between approval and then the procedural delays that need to happen before you can actually launch. Some complicated filings, the 19B4 form, the S1 filing, prospectus. We won't get into those technical details, but there is a lag between approval and launch, right? So what would that mean for the price of Bitcoin in the interim, do you think?
Well, I think Bitcoin price will jump initially on approval. And then again, as soon as the ETFs start trading is when you'll start seeing, is it living up to the hype? Is the demand there? Are the initial deposits or purchases living up to the hype? And if they do, then you'll see a second pulse upwards, likely. And if it doesn't live up to the hype, then, things will settle down and you may even see a drift downwards.
What do you anticipate the impact of a spot Bitcoin ETF approval, or several, as you say, being on Marathon?
So it's interesting that you asked that, because if you look at Warren Buffett's perspective on gold, he doesn't like to buy gold. He prefers to buy gold miners because you can participate then in the margin gain. A lot of people buy Bitcoin miners because of the beta in our stocks. If you look at how miner stocks move relative to the price of Bitcoin, we move with an amplified reaction because there's more volatility, if you would. There's more beta in our stock or the stock of our peers when it comes to moves in the price of Bitcoin. So Bitcoin might move 1%, we might move 4%, both up and down. So there's more risk, obviously. So if the price of Bitcoin runs up for an ETF, you will still see people who want that amplified beta trading in the miner stocks. Now, the real impact of the ETF is for institutions that can't necessarily hold spot Bitcoin. They want exposure to spot Bitcoin. They don't want the beta of mining stocks, though. And so there you'll find a large number of investors going into ETFs. I think also the consumer market is really one where, where, for example, a millennial or a Gen Z may go through the opening of an account on CoinShares or Coinbase or Gemini or one of these other exchanges and be willing to go through all the rigmarole of doing that and the risk. Whereas a baby boomer may be more interested in, hey, if I can buy it on Fidelity or if it's an ETF, I can put it in my retirement accounts or whatever. That might be more attractive. So I think it opens up the market to a broader audience of people. It removes friction in people going into the asset class, which only will serve to increase the demand. And again, the key thing with Bitcoin that differentiates it from equities or other commodities is there will only ever be 21 million Bitcoin. And we already have produced 19.5 million Bitcoin. And it's not like miners can turn on the crank and make more of it. There will only be released 900 Bitcoin per day until April of next year, at which point it goes to 450 per day. And then 4 years later, it drops by half again. So there's a supply constraint. And
right.
So as demand grows, price can only grow.
Right. And I want to focus on the halving in April. But before we get to that, I just want to ask, what about this idea that some have bought Marathon as a proxy for Bitcoin because it's easier, than buying Bitcoin, as you quite rightly said, barriers to entry potentially problematic for some. So is there any way that you see a negative impact for those that have been saying, I'm too complicated to buy Bitcoin, therefore I buy Marathon as a proxy for that, but now that I have a spot Bitcoin ETF, I'm just going to go that route?
Well, I think MicroStrategy is the better comparable to an ETF, right? MicroStrategy buys spot Bitcoin. They leverage their balance sheet to buy it, to buy spot Bitcoin. They hold it on their balance sheet. So it's kind of like any investment fund would do. A hedge fund can leverage their balance sheet to buy Bitcoin and hold it. A miner is actually generating a profit. And as a miner grows, it produces more and more. And so it's a different investment category. Will there be an impact? There may very well be. I mean, I'm not going to say there isn't a likelihood, but I think MicroStrategy would be something more akin to an ETF. And if you can choose, do I hold MicroStrategy or do I hold an ETF? I think Michael Saylor would say that, well, he can leverage his balance sheet so he can generate more return on the Bitcoin that he holds than an ETF could. So I think there's definitely a spectrum as you look at it, depending on the risk you want to take and the potential for upside. Miner stocks give you better upside opportunity, I think. MicroStrategy is kind of a midpoint, like any hedge fund would be almost. And then you have spot Bitcoin as kind of the conservative approach to it.
Okay, well, let's talk about the halving, which is expected to happen in April. And for our viewers that aren't familiar, the Bitcoin halving is an event that occurs when the reward for mining Bitcoin transactions is effectively cut in half. It reduces the rate at which new coins are created, and therefore it lowers the available amount of new supply. Bitcoin last halved on May 11th of 2020, resulting in a block reward of 6.25 Bitcoin. And as we just mentioned, the next halving is expected to occur in early to mid 2024. The block reward will then fall to 3.125. So you're going to have less supply and arguably more demand with the Bitcoin spot ETF and the institutions getting in. So when you take those combinations, do you have a price forecast for Bitcoin by, say, May of 2024?
So I'm a macroeconomist by belief when it comes to the price of Bitcoin. And like any asset, there has to be available liquidity for people to invest it in something. If you think about a supply shock, even today at 900 Bitcoin made per day, 6.25 per block, there are roughly $10 billion worth of Bitcoin traded a day. 900 Bitcoin being sold into the market doesn't have a huge impact on the supply. As you go to the halving, going from 900 to 450 on arguably what will be a higher volume of Bitcoin traded a day with ETFs coming into the market potentially, I think will have even less impact. So I'm not a believer in the stock to flow dynamic today. There's just too little Bitcoin supply going into the market. And that's with miners selling the bulk of what they produce. Most miners today sell almost all of what they produce. There are very few miners that are hodling like ourselves or Hut 8, for example. But most miners are selling everything they produce. So I don't think it's a supply issue. I think it's all about demand. For there to be demand, there has to be liquidity. There has to be ease of investment. So I think removing friction from buying Bitcoin and holding Bitcoin, making it easier, making it safer, that's what ETFs are all about. I think that's going to drive demand as an alternative to other investments. There's a risk we're looking at a recession going into next year. All the macro indicators certainly are saying that. If a recession happens, there's less discretionary spending by consumers. Where are they going to put their money? They're going to put their money where they get the best return. Well, guess what? Right now, money market funds are paying 5-6%. That's pretty attractive. So you've got to believe in Bitcoin to want to put your money there. Granted, I'm a big believer in Bitcoin, but I think it's really going to be driven by liquidity over time. The government is going to have to slow quantitative tightening. They're going to have to reduce rates eventually. All of that's going to drive more liquidity, which will long-term drive more purchases of Bitcoin. But I really think the ETF, by removing friction, making it safer, making it easier for people to hold Bitcoin, is going to drive a lot of increased allocation to Bitcoin. Then you're going to have retirement accounts opening up to being able to invest in Bitcoin because of the ETF, other things like that, which will drive more demand. And so I think those are the key drivers. The halving as an event, though historically price has moved on the halving, I don't think you're going to see supply shock having any impact because there is no real supply shock today even.
Okay, so let's talk about that push-pull of the macro landscape between the positive news of the ETF and potential recession, and also what a potential recession may mean for Fed action. because as you say, quantitative tightening, there may be backing off of that if we start to get real signs of tension in the market and in the economy. The last Fed meeting, we know that the Fed paused at 5.25% to 5.5%. It doesn't seem as though there's more than a 25 basis point hike in there, if that even. So what dynamics do you see winning out, and over what time frame? I mean, do you expect a Fed pivot by, say, second half of 2024, and that freeing up some liquidity?
Yeah, I think a couple of things are happening. One is there are fewer and fewer buyers of U.S. debt out there. China stopped buying debt. Japan has now stopped or slowed their buying of treasuries because of their change in their whole philosophy regarding curve control. And other nations are dialing it back as they don't want to have as much exposure to the dollar. I think dollar futures are looking like they're going to decrease, which is going to help other currencies and so make other government securities more interesting. The Fed is going to have to do something to be able to sell more bonds. So they don't really have an interest or motivation in lowering interest rates on bonds because that's what keeps buyers buying. On the other hand, quantitative tightening is flooding the market with U.S. treasuries. And so one way the Fed can actually create more demand for treasuries is to stop selling treasuries into the marketplace on the QT side. So I believe that we'll see a decrease in QT before we see a decrease in interest rates. The economy is still running quite warm. You're seeing a number of signs that consumers are still spending, but consumer debt continues to increase. Delinquencies are increasing. Go try and buy a car today. It's very hard to find a leasing contract. People are moving from a car at one price point down to cars at lower price points because of interest rates. Houses are harder to buy because mortgage rates are high. People are having to step back their spending. But people are still spending a lot on travel. They're spending a lot on entertainment. And, incomes are up. Unions have driven wage increases in the automobile industry. We're going to continue to see a lot of wage pressure continue, I think. So there are going to be sectors that'll be, definitely impacted by recession. Commercial real estate, obviously, is a big one. You're seeing it in financial markets. Go talk to somebody who's graduating with an MBA and see how easy it is to get a job today. These are high income earners who are having problems getting jobs. So I think we're going to see this sort of bleed into a recession. So interest rates, I don't foresee dropping before the end of next year, most probably. I see the Fed's going to have to do other things. Unless, of course, there's a big, we have a huge event that causes the economy to slow down. And then there are all the uncertainties of global geopolitics that are going on in the world today that are impacting things. But the big things impacting inflation today are energy and housing. So gasoline prices are coming down. Oil is down in the 70s. Housing, 30-year mortgage rates have come down somewhat. You're starting to see people willing to take on a mortgage at a higher interest rate in the hopes that they can refinance in 2, 3, 4 years at a lower interest rate. So, the American consumer is very resilient. My concern is the global consumer and what's going on, but we'll just have to see.
Right. A lot of uncertainties on the horizon. And as you mentioned, obviously, there is a big geopolitical factor here with tensions escalating in the Middle East and concern that there could be the spread of the conflict beyond Israel and Hamas. I mean, we've already seen that there's been some U.S. involvement to a degree, taking out some weapons facilities in Syria, believed to be Iranian weapons facilities, some strikes there. There have been some strikes at U.S. forces in Iraq and strikes coming out of Yemen. So there is concern that this conflict spreads outside of the Israel-Hamas dynamic. What impact do you see that having on Bitcoin if there is some kind of spread of this conflict? And of course, no one wants that, but as a safe haven, which Bitcoin is supposed to be, do you see Bitcoin then fulfilling its role as a safe haven if this conflict does, in fact, escalate?
Yeah, that's a great question. So there are two worlds of Bitcoin. You have the developed world view of Bitcoin, which is a store of value. It's an area where I invest. I put my money in it, but that's because I live in a country where things are safe and stable, and the fiat currency and the government works. In the developing world, where you have potential for high inflation, you have currency and capital flight controls, you have unstable governments. Bitcoin plays a very different role, which is, in the go back to 100 years ago in prior conflicts, people would buy diamonds and sew diamonds in their clothes when they needed to cross borders and leave countries. Now Bitcoin plays that role. So you clearly saw with the Ukraine crisis, Bitcoin take a jump up as people on both sides of the conflict wanted to assure that their assets would be easily transportable, or at least portable, and safe, and have self-sovereignty. I think you're seeing some of that in this conflict. The difference is the scope of the conflict today is limited in the number of people that are directly being impacted by it. But as it spreads potentially across the wider Gulf region, that would then drive, I think, a definite flight to asset protection and self-sovereignty, which Bitcoin's the perfect instrument for that. So I think that could have an impact.
You wouldn't see potentially a move away from riskier assets if there is a spread?
Excuse me. Yes, I mean, it all depends.
I mean, this is like a test for Bitcoin as a safe haven asset. Like, for example, if there is a conflict that escalates, and remember Iran being a major player in this conflict, the sponsor of the terrorist groups Hezbollah and Hamas, which are involved here, there's always concern with oil in that area and what that could mean. And if we have some kind of blockade or some kind of friction in the Straits of Hormuz, where 20% of the world's oil supply flows through, that could see oil shooting up. On the one hand, that could be that effect that sees the Fed forcing to loosen and perhaps even more money printing, which could be good for Bitcoin. But on the other hand, that could just create a very risky all-round environment, which may have people, back off all risk assets. So what kind of dynamic do you see playing out for Bitcoin there? Is it more as a safe haven in that scenario, or more as a, risk off asset?
So I think Bitcoin has shown itself to decorrelate itself from everything recently. It has, the correlation to equities has diminished. The correlation to gold has diminished. As an inflation hedge, it's diminished. I think in a world of lots of uncertainty, people who are believers in Bitcoin will only double down and move more of their assets into Bitcoin. You're correct to say that in the event of a crisis in the Gulf and oil being impacted, oil prices shooting up, that would cause a huge impact on inflation in the Western world, certainly because of energy prices going up. The U.S. is one of the largest producers of oil in the world. We don't refine a lot of our own oil, and so that causes an impact. The petrol that people use in the U.S., a good portion of it has to actually be refined outside of the U.S. So all of these issues create risk, and people who want to make sure that they can have their assets close at hand. Is there risk of bank failures? Are there risk of defaults? Things like that. I think people will, to a certain extent, move funding into Bitcoin. Just like gold previously has been a haven. And the advantage Bitcoin has over gold is it's fungible, it's transportable, because it's in the ether. The only thing that can harm Bitcoin is, if the internet were to go down, essentially, when you think about it.
Right, which would arguably mean we have much, much bigger problems if we have a global internet outage. Of course, some would say that gold has been proven as a safe haven for thousands of years. So this would be an interesting test for Bitcoin as a safe haven if this conflict escalates, which of course we certainly hope that it does not, Fred. But let's assume things remain contained in the Middle East, as tragic as the situation is at the moment. Let's assume that this is as bad as it's going to get, and that it just sort of maintains the current dynamic. What is your price forecast? Because as a miner, you must have a price model in order to determine how much activity and how much investment you put into your mining facilities what is your price model forecast for, say, and I don't know how you guys do it. Is it within a 6 month period? Is it within a year's period? But let's say middle of 2024, June, July 2024.
So I'm not going to give you an exact number, but what I can tell you is we run three scenarios: bear, base, bull, where the base is the one we really run our business on. And the base scenario is very much driven by global liquidity. And so it's a very conservative estimate. We're already well above our internal estimates on where Bitcoin price should be today. So we're obviously very happy because of that, because there's upside, and we're even borderline on the edge of and beyond our bull case scenario right now. So, we have been estimating Bitcoin pricing immediately post the halving, so say June of next year, to be really in the territory where it's edging up to now. So if all things remain the same, then and Bitcoin remains flat, which I don't think it will today, then we would be kind of on track. Now I think we would be increasing our forecast somewhat based on what's going on. And, if an ETF is approved, we'll increase them again. But we typically look at kind of the halving and then the end of the year and then the end of the following year and the end of the following year, et cetera, until the next halving as kind of our goalposts.
All right. Well, let me try to get you to give me a range, and I'll use Bernstein as an example here to get you to weigh in on their estimates, because analysts there have projected Bitcoin hitting 150,000 by 2025, all on the same sort of conditions and factors that we've discussed. Is that something that's consistent with your views and your models?
So if by 2025 you mean the end of 2024, so January 1, I think a more likely scenario is we'll be somewhere between 50 and 80,000. I don't see us being over 100,000 by then, unless there's some major demand driver. So ETFs are hugely successful.
So by beginning of 2025, you don't see Bitcoin above 100,000, beginning of 2025?
No. I think end of 2025, you would, if Bitcoin were to follow historical cycles, that's when we start seeing 6-digit price of Bitcoin. There's a huge psychological factor in crossing over the prior all-time high of the high 60,000 range. And so I think there's we're going to hit resistance at various points. If you're a technical trader, there's this concept of resistance and support levels. Mm-hmm. There are a lot of resistance levels we have to break through. 40, the mid 40s is a major one right now. And then you get to the all-time high is another one. And for us to maintain support at above those levels, you then have a lot of Bitcoin that has been purchased in the between 20 and 30,000 kind of range, which is all of a sudden going to be looking to be sold. And then you're going to have new holders at higher levels. And so, these things go in waves. And I think that it's not just a straight line to the upper right-hand corner of the chart. I think it's going to go up and then it's going to drop and it'll go up and it'll go up.
Right.
Like that.
And some profit taking, as you say, is probably going to be on the cards for many. Keeping in mind, Fred, that this time last year, the sentiment in Bitcoin, in cryptocurrencies at large, was so negative as FTX was starting to unravel. And we had Bitcoin drop to 16,000. And you had the bears saying, see, we told you this was all a scam. We told you that Bitcoin was a bubble. This is all coming apart now. It's a year later. Are you surprised at the resilience that exactly a year later we have Bitcoin more than doubling from where it was a year ago? Are you surprised at the rate of, say, recovery that we've seen in the market over this time period?
So if you were to look at sentiment charts for Bitcoin, and you're very right in pointing out that it was very bearish at this time last year, but you look over a longer term perspective, there was a belief in 2021 that the institutions were going to get more involved. And that is now starting to happen. FTX caused a big delay, but it also provided the institutions with the time to kind of figure out how they were going to play in this. You have to realize that BlackRock and Larry Fink, very savvy. Listen, if this market is just running up and to the right like it was in 2021, it would make no sense for them to go in and launch an ETF because it just would be very difficult. But now that you have the regulators kind of hammer on a lot of crypto companies, they saw an opening where they could come into the market and build demand for their product, their ETF, when there isn't all this hyper demand going on, because they don't want a huge bump up and then a crash. So what they want is this nice, steady, continual climb, because if they get a good, steady, continual climb, they're going to get momentum and more people, because this is a process of learning. There are a lot of people out there who, if you say, how do you invest in Bitcoin? They'd say, I have no idea. Right? And there are logically fewer than most probably, I would say 25% of this country's population, adult age population, knows how to go and buy Bitcoin today. And an even fewer percentage have done so and are willing to do so. So as an ETF comes in, you have an education process. People have to learn about it. Oh, it's normal. I'm reading about it. The press is talking positively about the ETF. Oh, the ETF is performing. Maybe I should allocate some money to it. So it's a process. An ETF issuer wants there to have a good period of time to build momentum. And it's really hard to do that when there's hyper demand going on. And so I think that this is the perfect time for them to launch. You're seeing all of the financial institutions starting to lean into Bitcoin. You're seeing a great bifurcation between Bitcoin and crypto in general, which is fabulous for Bitcoin. Bitcoin is a commodity. The SEC has already determined how Bitcoin is going to be treated. I think the two other events that will drive Bitcoin here, one is the FASB accounting change, which will allow companies and institutions to hold Bitcoin directly on their balance sheet because they'll be able to market to market. That is a huge thing for corporate balance sheets and corporate holders of Bitcoin. And the other would be a tax change where people who are transacting in Bitcoin don't have to pay capital gains when they buy a bus ticket with Bitcoin.
Right. Well, I don't recommend anybody buys a bus ticket with Bitcoin, but I get your point there, Fred. And look, this idea that FTX collapse kind of paved the way for these big institutional players to step in does have some conspiracy theorists sort of tingling with their spidey sense there. There has been some kind of talk that maybe some of this was perhaps by design and intentional, that regulators kind of look the other way and let FTX implode. But we won't necessarily go down that road, only to mention that it has been something that has been flagged. But there has been another big issue with regards to BlackRock getting into this market. And it does have a lot of people concerned for various reasons, which I'll go into, that this is not necessarily good for the long term and for the long run and for the broader mission of Bitcoin. I mean, we just mentioned how in 2018, Larry Fink said that Bitcoin was an index for how much money laundering is being done in the world. He was very much against it. They've done a complete 180 in terms of sentiment. We know that, they were launching the ETF, as we've just discussed, and most likely will be one of the ones approved. But they were also investing in some of the miners. We have data that shows that BlackRock has invested in 4 of the 5 largest Bitcoin miners by market cap. And this has some Bitcoin purists, and not necessarily purists, but some Bitcoin supporters concerned that between control of the miners and a spot Bitcoin ETF, that BlackRock may be consolidating too much Bitcoin power. You're going to have some centralized custody in the spot Bitcoin ETF. You have them getting into the mining space. They're consolidating power in the whole ecosystem at large. And it could be jeopardizing Bitcoin's decentralized money mission, the original idea of why Bitcoin was conceived. Is that a concern you share? Do you see the spot Bitcoin ETF potentially being problematic for the broader mission here?
On the Spot with Michelle Makori is brought to you by Swan Bitcoin. Swan Bitcoin IRA. Your legacy, your way. Real Bitcoin, not proxies. Traditional and Roth IRAs. Fast, easy setup. Start now at swan.com/retire.